More Singaporeans will be able to monetize their flats upon retirement. You will also be allowed to withdraw more from your CPF when you retire. Is this enough to ensure your financial peace of mind? Talking Point starts now. Good evening, I'm Stephen Chia. At the Prime Minister's National Day rally on Sunday, Singaporeans' retirement needs were a key talking point. What is the assurance that we will have enough to retire on? Some key announcements were made. More than half of HDB flat owners will be able to unlock the value of their homes with the lease buyback scheme extended to 4-room flats. And the government will pay a silver support bonus to help the 10 to 20% without enough CPF. CPF members will be able to take out a limited lump sum upon retirement, and greater flexibility to invest once CPF money is one of the issues to be studied by a new advisory panel. So, what do you make of these changes? How big a sum should CPF members be allowed to withdraw at the age of 65? Would you sell back part of your flat's lease to the HDB for more retirement income? Tell us what you think. Give us a call, 66910028. You can tweet us at TelTP. Let me welcome my guests for this evening. Joining me on the show, Dr. Joseph Cherian, Director of the Centre for Asset Management, Research and Investments at NUS Business School. Mr. Edwin Siu, a financial consultant. Mr. James Chia, co-founder of financial education company Innovative. And Mr. Chan Kok Ho, an economics lecturer at NUS. Good evening, gentlemen. Thanks for joining us. Now, let me start off with the median household income standing at $7,500. In your view, what would most middle-class Singaporeans consider an adequate cash amount for retirement? Kok Ho?
Well, it's a very idiosyncratic situation. Different people have different needs, right? I think the financial advisors typically go for a baseline of 75%, but that's probably too high in my opinion. I think if you've done your homework, you paid off your children's needs, right, and you've done well enough to put aside a little bit for your health insurance above and beyond Medisave. You should be okay with a lot less than that, maybe 50% or something even less than 50%.
Okay. Joe, can I get
if you take the median per capita per person income, that's about 2,300 per person, and for a couple, middle income retired couple, that would be about 4,600. So I would say 4,600 and a bit of a haircut. As we said, when you're in retirement, you're an empty nester. So a haircut, probably somewhere around $3,500 to $4,000 is my estimate.
Okay. Edwin, do you have a number?
We just held a seminar. So if you break up retirement to active retirement and non-active retirement, probably in active retirement during early stages, with 2,000 to 2,500, I would say. Yeah.
And James, your take?
Well, it wouldn't differ too much from what analysts have already mentioned. I think one thing we have to think about is inflation. That's today's dollars. In 20 years or 30 years time when you retire, who knows how much will it be.
Okay, so it really depends on quite a few different factors. But let's take a look and see, how far our CPF savings will go in terms of meeting our retirement expectations. We went out, spoke to some Singaporeans, and this is what they think and how the sums compute. Take a look.
According to a recent Manulife survey, only 1 in 5 Singaporeans who invest is confident that CPF will meet their retirement needs. But what do the hard figures show? Well, supposing a Singaporean expects a monthly payout of $2,000 upon retirement, he would need to have $250,000 in his CPF account. This is far above the current minimum sum of $155,000. And if he has pledged his property to meet half of the minimum sum, the payout dwindles to $600 a month. In 2013, only half of those who turned 55 met the minimum sum with both cash and property. And what of those just joining the workforce? In 2012, 2 NUS economists computed the future adequacy of CPF savings. A man earning a median wage could potentially get 70% of his income when he retires. But if he withdraws his CPF savings, relying only on CPF life payouts from the minimum sum, he would get 35% of his former income.
Alright, we've just seen from the clip that the bottom line appears to be that retirement savings in the form of CPF alone will not be sufficient for many. Given this, the idea to allow a lump sum withdrawal from the age of 65, how will that further impact retirement adequacy? And what are your thoughts and concerns about this change in policy? James, let's start with you.
Well, I think the concession by PM to allow members to withdraw is meant to give some flexibility to people. I mean, there's a lot of call for myself to manage my own money. But if you think about that, the funds that the CPF, Pioneer CPF, actually have a very high interest rate. So if you want to take out that money and you want to invest it, then you better be sure that you can beat the 5% return for your first 60,000 of your CPF. And that's not necessarily something very easy to do, even for a financially savvy person, because what you're guaranteed is 5%. Good times, bad times, you're always going to get that. So there's to be a lot of, I think, education involved, and you need to make sure that when you take out that money, you don't, I guess, spend it on current consumption, and then that basically defeats the purpose of having enough funds for retirement.
I think the Prime Minister kind of had in mind that this particular withdrawal would not be for financial purposes, it would be for something really meaningful. And I think he specifically mentioned the Hajj. And Hajj is pretty expensive nowadays. You can spend up to $15,000, even $30,000 to go on Hajj. And for our Muslim brothers and sisters, this is really important. They have to do it at least once in their lifetime. So I kind of understand where he's coming from, but it's definitely going to hurt finances. We are actually looking at people who do not quite have enough to meet their minimum sum, or people who are just meeting the minimum sum and a little bit more. Those who have a lot of excess, they have no problem because they can already do the withdrawal. So these are people at risk, and allowing them to withdraw this amount, definitely is going to cut into the viability of CPF itself. I think it's going to push them more towards monetizing their homes.
Right, but as you mentioned, I mean, some people have dreams, aspirations. Upon retirement, I want to do this, I want to do that. And yeah, they should be given that opportunity to fulfill some of those dreams, right?
Right, but we have to be realistic here. I think we just heard the clip saying that a lot of people are, maybe 50%, are not have not hit the minimum sum level yet. And secondly, if you look at the payout structure that comes from the minimum sum is something like $1,200 per month. That's what's estimated. That's not a heck of a lot. So now you're digging into a pot of money which wasn't a lot in the first place, which you probably have not met for some other purposes. So we've got to be very, very careful when we dig into that pot. And as pointed out by James, the opportunity cost, it's 5% the opportunity cost, because you could have been earning a 5% savings rate. That's a very high rate to forego.
So can we go in between, perhaps limit? Say you can take out 10%, 20%. Should we put a number to that?
Well, I don't have a number off the top of my head, but what I think can be done is those who have savings in excess or have the potential to reach that amount in excess of the minimum sum, we can say 10 to 20% of that excess can be withdrawn. And then those who are far ahead or far in excess of minimum sum can have a lot more flexibility. So I think we have to do it sort of pillars or stages or whatever.
Right, but that's going to be hard because those who have a lot of excess may not, in a sense, require it as much as those who do not have that excess, who only have that portion, you know?
True. I mean, I don't want to dominate this. Go ahead.
Because at age 55, these people already have the flexibility to withdraw the cash by pledging their property to up to half the minimum sum. So if, like what the clip showed, only half of Singaporeans meet the minimum sum, so that will give $1,200. And going by calculations, $1,200 a month would just meet very basic necessities. So if you were to chip off 20%, the cap now is going to be thousands. Still palatable, but I think anything less than that would be really tight.
I mean, we're talking about numbers, and yes, if in the know, the numbers practically don't make sense. But for a lot of these people, it may not just be the numbers. It's that emotional pull where you're saying, it is my money, I would like to do something with it, something that I've been wanting to do. So just let me have some of it, What would you say to them? Sorry, I'm just throwing this out here. Well, can we then, for example, limit or put some conditions on what the money can be used for? Will that be helpful?
Yes. I think the money should only be used for emergency purposes. So from what I gather, people in their 50s to 60s are at the highest risk of retrenchment because they're younger people coming up, foreigners maybe. So sometimes they really need that poor money to tide through, or maybe family members get sick and they need that money for medical expenses. So I think these are valid reasons for the withdrawal.
Although arguably, I think the medical emergencies would be covered by the Medisave portion or Medishield portion of CPF.
Yes, so with the Medishield Life, that would add some assurance to the people who are uninsured. So so that will be help next year.
Yeah, there's a little bit of an incentive problem. We try to use it as unemployment insurance, right? We know some people may not be really trying to get work and they declare unemployed and in order to get some of this money out. So there's a little bit of a problem there. I think it's got to be much tighter. Right? I can certainly understand the Hajj. Okay, no question about that. But very few things other than that ought to qualify.
Well, then coming up with that list of what it can be used for is going to be a very difficult task. And we've talked about also saying the numbers, the practical numbers that may not make sense to people. Should we help them better understand? Is there more education required to say this is why this is being done and this is really what it's all about?
Yes, definitely. I mean, recently there's this case study of this widow who born $1 million in a year, right? Because she probably didn't have enough advice or just not enough prudence. So I think more should be done in this aspect following this case study.
Can we then offer, say, you want to take out the money for this purpose, and then say you need to understand or give them counseling on what are the trade-offs in that sense? Will that work? Is that effective?
Certainly, I think so. Financial education is definitely something that's important. I mean, the government themselves, the Money Sense program, definitely tries to do a basic financial literacy education to the public. I guess one question is how effective it would be because everybody's circumstances are different. So it's really a matter of teaching the basic building blocks of what goes into a financial plan, parts of your personal financial portfolio, how the CPF plays a part. If you take out money, what you give up. I think that would be very, very useful. And the method of delivery must be important. Young people who are considering it, maybe something digital. An older person, maybe a pioneer generation package.
Yeah, those are just the tools, a means to an end. But we did go out and get some reactions, because we're wondering, will there be a rush to withdraw their savings when Singaporeans reach the age of 65? Well, here is what some of you had to say.
I like to have that, withdraw 20%. Oh, that's good for me. 20% is not really big money, but as long as your sort of wishes for your retirement, like traveling and all this, is met. It's good enough.
No. Because CPF offers pretty attractive interest rate, which I couldn't get it with any banks. In any way, I always believe that with the cash with me, I probably will be spending faster.
Definitely, yes. It's better to have your cash held by your own and managed by your own.
Having it inside minimum sum is a form of investment or protection rather. Yeah, because it gives minimum payout every month, so it's kind of good.
If there is such a need, then it is another option that I will consider. Most likely is for emergencies. Such as perhaps when siblings, my siblings, or my wife's siblings needs the money.
It's time for us to take off for a short break, but we want to hear from you. Tell us what you think of the CPF changes. Give us a call, 66910028. Tweet us at TelTP. And later on, we'll talk about more choices in how to invest your CPF funds. Is it something you would like, even if it means taking bigger risks? And how can you turn your home into a retirement cash cow? Stay with us. Back after the break. Welcome back to Talking Point. How do we ensure that our CPF savings are sufficient for retirement? Inflation is a key concern, and next year the minimum sum will be raised to $161,000, and Prime Minister Lee says he does not see the need for any further major increase. Joseph, Coco, I'm going to get your take on this, but what can be done to ensure that CPF savings keep pace with inflation? Joe, you want to go first?
Well, one thing is to index the payouts and the savings rate to the inflation level, and that's one way to keep pace. And the reason why you can't expect investors to go out and try to do this themselves is because to inflation hedge yourself is not an easy activity. The best entity to be able to provide that kind of hedging, inflation hedging, is the government, because they have policies and tools in their toolbox to control inflation and take care of things. That said, I want, in defense of the government, as was mentioned by the panelists, the 5% savings rate that you get on the first 40 or 60,000 of, if you qualify for it, is actually a very, very good interest rate. It's well in excess of current inflation rate, and so basically you're already earning an interest rate well above inflation. So the two sides of the coin.
Yeah. Go.
Yeah, if you look at the private sector pension plans, there are plans that actually help you deal with inflation, but they are extremely expensive. And the reason why they are expensive is manifold. One of the reasons is because the insurance companies themselves have difficulty handling inflation, right? Especially in the context of Singapore, where there's no inflation index government bond to work with. So it's difficult for them. And secondly, because people who are worried about inflation protection when they talk about pension plan or annuity tend to be people who are going to live a very long time, and they want to make sure that their retirement savings at 30 years down the road, right, are inflation protected. So insurers know this. So the pool of people who want to buy inflation protected pensions probably tend to be a little bit richer, tend to live a little bit longer, more expensive for the insurance company to cover. Right. So I think it's better for the government to do it. Like what Joseph said, government has much more capacity to deal with inflation. We call this an aggregate risk. Aggregate risk really should be handled by the one with the biggest capacity, which is the government.
Right. Well, earlier we were talking also about having more flexibility for CPF members to withdraw their money, but what about the flip side? I want to share with you what Mrs. Ho, a radio listener, had to say. Listen in.
I'd like to put even more money instead of 161,000 with the CPF Life, so that my monthly payout will not only be 1,200. Because I think that when I grow old, I will not be able to look into like letting out a room of my house or even go into other more riskier investments to earn higher rates of interest for my savings.
So, should flexibility go both ways? Allow those like Mrs. Ho to put more money into their CPF Life annuity scheme to get bigger payouts? What do you think?
I think Mrs. Ho, she has to understand that the CPF Life is a risk pooling scheme. So, in the sense that people who live shorter subsidize those who live longer. So, because the government, the CPF board, kind of arranges the rates to be paid on a median, right? So, yeah, I mean, she's free to do so to increase her minimum sum, well and above the minimum sum.
I would agree with that actually, because if you think about the CPF, actually the CPF Life is actually a financial product that somebody could choose to subscribe to as well, right? If you had options of offering from a financial institution, CPF Life is one such product, and if it gives such a a good risk-adjusted return, then members should be given option to consider it. You don't force everybody to take it or not to take it, but at least the option is there. If you want options, then I think this is a good one, in my opinion.
Well, if you do give the option for people to choose whether they want an inflation-protected scheme, right, or one that just gives you the same nominal income throughout, right? Yeah, like I said, those people who expect to live longer, they're going to take the inflation-protected scheme. Those people who expect to live shorter probably will stay with the old thing, right? I think the overall cost of the system will go up quite a little bit.
Yeah. If we only knew exactly how long we were each going to live, that would make life easier. But we also, talk about retirement. Not many of us, or sometimes people don't think about retirement until a different stage of life. So how savvy or active are Singaporeans in managing their retirement plans? Our producers went out to the streets to find out. Listen in.
I haven't, yeah. But there's too many things to think about now, so I haven't really thought much about the future, I guess.
When I'm planning, maybe my 40s, maybe 5-6 years later.
I brought some saving plans. It's just some endowment with the banks and insurance company. Yeah.
mostly investments, property, businesses, or whatsoever. Yeah. Of course, I'm also looking at other opportunities. I think just purely working and saving won't really help to increase wealth and retirement.
Yeah, we actually have put aside a sum of money for our children, and in terms of housing, we have actually bought our own properties. We own our own properties. Yeah. So in that sense, we have actually made sufficient preparation. Yeah.
So some people having thought about it there, and there have been calls from especially the more financially savvy investors to allow for more flexibility in how one can invest their funds. So should higher risk options, for example, be on the cards for them to decide? What are some examples you think of what people can do?
But before we go there, can I just mention something about what was said earlier in that clip? First of all, they should start early. They should start thinking about these things right from the get-go, not while they are 40s or 50s. So I hope through the segment, some people be encouraged to start looking at these issues earlier on in life. Right. And that's the main thing I wanted to say. And now we can go back to your...
Sure, yeah. I mean, so retirement, you're saying retirement should start from a very early age, fair enough. But now, what are the options that I have? Can I have more flexibility to decide how I want to invest my money and perhaps take on higher risks? Because they're saying if you're younger, you may be more willing to take on different risks, right, versus you're older.
Yeah, so currently, the CPF investment scheme, right? CPF OA funds can be invested up to 100% in investment-linked policies, insurance endowments, unit trust, exchange-traded funds, fixed deposits, and money market instruments, and up to 35% in stocks, property funds, REITs, and corporate bonds, and only up to 10% in gold ETFs and UOB gold products. Whereas for the higher interest rate SA, you can only invest ILPs, endowments, unit trusts, ETFs, fixed deposit, money market.
Is that enough? Do you agree? Do you think that's enough?
I think that's too much.
That's too much?
That's so much choice. What happens? I get paralysis.